Hi, I'm Juan Arango from Exit Ventures. If you or your family are considering selling a family business or a portfolio company, this conversation is for you. In today's videos, our managing partner, Paul Bergen, who's led over $3 billion in strategic acquisitions, will walk you through exactly how to position your company for a successful exit to a strategic buyer. So let's go ahead and dive in.
One of the one of the most frequent questions I get is how do you find a strategic buyer? And so let's chat about that for a second. Uh, so there is three basic questions that we should ask when we're thinking about, the eventual process of selling to a strategic. Number one, who is in the market now? Number two, who should be in the market, who's not? And then number three, who is complementary and, is more or less loosely defined in the market, but not directly in my vertical. So let's talk about, who's in the market now. It's easy for, people to say, well, GE or Google or whoever's in my market, and they're, the big two or three public companies, and that's fine. But we need to be a little bit more in depth. And we've all seen startups who said, well, here's a list of public companies in the industry, and I'm sure they're going to want to buy me, in 5 years, right? So let's talk a little bit about that. When you look at the list of companies that are in the market, you want to try and do your research and find the few that, one, are actively making investments and acquisitions in your industry segment, who has the culture and the fit that is appropriate for the legacy family office or family business or your portfolio company, and who looks like they're going in the right direction over the next 2, 3, 4, 5 years compared to either the legacy business or the portfolio company. It's easy to just say, well, these 5 or 10 companies are public and in the market, and then kind of stop there. But my key point, and I'll keep mentioning this as we go, is finding a strategic buyer is like dating, right? It's like finding your spouse eventually. You're building a relationship, you're building a multi-year relationship, and you need to be in dating mode. And as a former corporate investor myself, like I saw processes where we had built a relationship over years and where other people had tried and built relationships with us over a multi-year period. And that was by far the best process. So number one, build a relationship, think of about a multi-year relationship. Digging into that a little bit, how do you look for ways to cooperate? So if you want to build a great relationship, it's working together, right? How do we leverage our technology so that they can help us with a co-development project? How can the strategic help us sell our product through certain sales channels or certain geographies where we don't have great presence? You can go to a strategic and say, look, you're global. We're only strong in North America. Can we sell our products through your channels in Europe or Asia? Um, can we work together on a co-development project? Can we, any kind of cooperation agreement? And that way you get to know them, they get to know you, but more importantly, they start to rely on either your technology or your product or your sales channels. And that's the most important thing, is like it, to the extent that you can get them to rely on you for some aspect of the relationship, you're much better off. The next question, in terms of who should be in the market, just a really brief story. So I used to work at a company called Fluke Electronics in Seattle, which was, a $350 million revenue public company, number one in the world for electronic test and measurement, very strong brand name. At the time, right, a few years before I joined, they were number one in the world for building an industrial electronic test, but they had zero presence in the booming market in the late 90s and early 2000s of network test and measurement, and in building LAN and WAN network monitoring and test. And that was where all the growth was, right? There was like 2 or 3% growth for industrial and building electrical test and 15% annual growth in networking. And so a startup asked this question when they were looking for an investor and a buyer who should be in the market, who's not. And at the top of their list was Fluke. And so it was a Colorado startup. They approached Fluke Electronics and said, you guys are not in this market. You should absolutely be in this market. It's a very high growth market, and you can leverage your brand, you can leverage your channels, you can leverage all of the technology that you already have and add, tremendous amount of synergies to us. Fluke looked at it, they did their due diligence, they agreed, they bought this startup for, I think it's like 20, 25, $30 million. And within 5 years, they were the #1 test and measurement company in the world in networks. It was a phenomenal acquisition by Fluke Electronics. So it just shows the power of, either you or somebody on the team knowing who should be in the market, who's not. And then you ask your question, where is their strategy taking them? Where does their tech and ours intersect? And then you can have this conversation like the one that I just mentioned to have a deep and meaningful relationship building exercise with a company to say, look, here's where you're going, here's where we're going, here's where we can create synergies, and 1 + 1 = 5. The last question is, who is complementary? So who's building a portfolio where they may not be in our industry, but our technology is very complementary on a portfolio basis to what they're building, and how can we help them either through geographic presence, sales channels, technology, or any of the above, or otherwise, and take a look at a complementary portfolio approach.